Hello everyone, welcome to my YouTube channel. In this particular video, let us discuss one more problem related to incidence of tax. Mr. Avinashi furnishes the following information of income for the assessment year 23-24. Find out his total income if his residential status is as follows. So this is a question which had come in the question paper in 2019 November month examination. They had asked this question, so I have taken this question from the question paper. Income from business from Mumbai. Mumbai is in India. So both arising aspect is in India and receiving aspect also will be in India. So it is an Indian income. 1 lakh rupees will be taxable for all the three residential status. ಅದು Indian income, so all residential status ಗೆ tax ಮಾಡ್ತೀವಿ. Next, profit from business in USA controlled from India. So arising aspect is in USA. USA ಅಲ್ಲಿ ಒಂದು ಬಿಸ್ನೆಸ್ ಇಂದ ಪ್ರಾಫಿಟ್ ಬಂದಿದೆ. ಆ ಒಂದು ಬಿಸ್ನೆಸ್ ನ ಇಂಡಿಯಾ ಇಂದ ಕಂಟ್ರೋಲ್ ಮಾಡಿದ್ದಾರೆ. So it is a controlled income. When it is a controlled income, so two peoples will be taxed. One is ordinary resident and not an ordinary resident. So controlled from India. Next, income from house property in Japan received there. So arising aspect is in Japan and you're receiving the income in Japan. Both are in Japan, which is outside India. So when it is an outside India, we consider it as foreign income. So it is a foreign income from house property. When it is a foreign income from house property, only ordinary resident will be taxed because it is foreign income from other sources. Next, income from business in India but received in London 30,000. So in India you are doing a business and from that you are receiving getting income. So income is arising in India and you are receiving it in London. So arising aspect is in India. So it is considered as Indian income. So all three people will be taxed. Next, salary computed received in India for services rendered in USA. So in USA, you have rendered certain services. For that, you are receiving the salary in India. So receiving aspect is in India, arising aspect is in USA. So as I told you, any one of the aspect, if it is in India, then we consider that part to be Indian income. So here we are receiving in India, so it is considered as Indian income and all the three people will be taxed. Next, profits from business in Malaysia controlled from India, 1/3 received in India. So there is a business in Malaysia and they are controlling that business from India. So there are again two types of income. One is controlled income because you are controlling the business from India. Second thing is that 1/3 you are receiving in India. So there is Indian income also. Two types are there. So let us analyze the question properly. So profits from business in Malaysia controlled from India. So from India you're controlling. So there is a controlled income. So 1/3 you are receiving in India. What is the remaining? 2/3 is the remaining. And that 2/3 is a controlled income, which is foreign income only. So 30,000 is a total amount. In that 2/3, it is controlled income. And controlled income, only ordinary resident will be taxed. Other two people, sorry, controlled income, ordinary resident and not an ordinary resident will be taxed. I'm sorry. Controlled income, ordinary resident and not an ordinary resident will be taxed. And non-resident will be not taxed. Third person. Next, 1/3 they are receiving in India, which is an Indian income. So 30,000 into 1/3 will be 10,000. So as it is an Indian income, we will be taxing all the 3%. Next, past untaxed income brought into India. Very, very important information. First time it has come here. Any untaxed income, past untaxed means which will be not taxed in the previous assessment years, that should be ignored. It is considered as exempted income. Past untaxed income ಏನಾದ್ರು ಇತ್ತು ಅಂದ್ರೆ that is an exempted income. This one you make a note of it. Any past untaxed income, it is completely exempted. Dividend received from a domestic company. Domestic company means it is Indian company. So arising aspect is in India and receiving aspect is also in India. So it is hence considered to be Indian income. It is Indian income. Next, agricultural income earned in Nepal. So Nepal is outside India. So you have earned an agricultural income there. They have not told where you have received that. So when they have not told, you will by default understand that you have received Nepal only. So both the arising aspect as well as receiving aspect is outside India. Hence, when it is both are outside India, we consider it as foreign income, and it is a foreign income from other sources. When it is a other source, only ordinary resident will be taxed. Only ordinary resident we are taxing. Next, interest earned on post office savings bank account. So as you all remember that in part 1 video I have told some additional points. If it is a post office savings bank account, if it is a single person's account, you will get exemption up to 3,500. In case of joint account, you will get the exemption up to 7,000. So here whatever the interest he has earned is 5,500. So in that 5,500, 3,500 will be exempted. Remaining amount will be taxed. It is Indian income. So total interest received by him is 5,500. According to IT law, 3,500 exemption is there. So remaining 2,000 is considered as Indian income and it will be taxed to all three people. That is ordinary resident, not an ordinary resident, and this thing, non-resident. Next, interest received on private company securities. So interest received on private company securities. So we assume that it is an Indian company only. If it was in some other different country, they would have mentioned in the question. So when they have not mentioned anything, we assume private company. So we assume it to be Indian company. So 30,000, we assume it is in this thing. So it is in, as it is an Indian company, all the three people will be taxed 30,000. Next, gift received from father. So father is a blood relative. As I have told in my part 1 video, gifts received from blood relatives. Any gifts you receive from blood relatives, it is completely exempted from tax. So it is an exempted income. So 30,000 is completely exempted. Now when you add everything, you will get total income or gross total income. So 3,92,000, 3,17,000, 2,47,000. This is our total income. Next. So hope you have understood this particular question very well. So if you have any doubts regarding this question, please ask your doubts in the comment box so that I'll respond to your doubts and queries as soon as possible. In my next video, I'll come back with some more problems related to incidence of tax. Hope to meet you all in the next video.